Have you ever felt like gold prices were moving, but you really didn't understand why? That was so frustrating to me, especially in the beginning. So in this video, we're going to talk about the three key things that are behind gold's movements and the reason why it moves the way it does. Sometimes it's up, sometimes it's down, sometimes it's by a little, and sometimes it's by a lot. So first, I'm going to walk you through the fundamentals and what that even means for the gold market. Next, we're going to jump into the news and the economic events that really matter. Those are going to be the things that really move gold's prices. And by the end of this video, you'll have a better understanding of how gold moves without feeling overwhelmed. So first, we're going to start off with the basics. Gold is heavily influenced by economics. And some of those things that are really going to move the gold market are going to be things about the US dollar, the strength or the weakness of the US dollar. You're also going to see things about the economy. You're also going to see things about rate cuts. So anytime you see anything referencing FOMC, which is the Federal Open Market Committee, they meet roughly every 2 months and they decide whether or not the interest rates are going to stay the same, go up, or go down. So those are some of the things that heavily influence the gold market. And when it comes to looking at the gold market, it's very different from stocks because yes, stocks are influenced by economics. The biggest drivers in stocks are going to be things related to their earnings per share. So what is the expectation there? What were their earnings for the last quarter? Did they make money? Did they lose money? So those are going to be the things that influence the stock market in general. But gold is so much different because there could be a situation happening in another country and it could affect the gold market. So here's where things with gold get a little bit tricky. And it's the fact that gold can be moved by something happening half a world away from the United States, and that could push gold in one direction or the other. And it's not just people in the United States who are trading gold. There's literally people all over the world who are trading gold. Let's just say in a 1 hour candle on a stock chart, that could mean maybe millions of dollars. But on a gold chart, that could actually be billions of dollars. So you're basically operating at a much larger scale when you look at the gold market. If you're tired of missing out on gold's big price moves, then go ahead and check out the Profitable Gold Market Blueprint. In this guide, you're going to have an easy to follow profitable trading table that tells you exactly when gold will be bullish or when gold will be bearish based on what's happening inside of the market. And it also includes profitable entry levels and different strategies. So maybe you've tried to understand the gold market, but you felt overwhelmed by charts, reports, and all these other things that you think you should be looking for inside of the gold market, but it really doesn't have to be that hard. In this guide, you can understand what it takes in order to make consistent profits inside of the gold market and really understand everything you need to in order to take the actions that you need to take in order to be successful. So you can decode the gold market trends like inflation, FOMC, geopolitical events, and also master simple strategies that follow the big players. So banks and institutions, basically you want to be following them. And then you also want to spot profitable opportunities to avoid common traps. So that way you can stop second guessing yourself and just enter the market. And then also understand key support and resistance levels in order to time your entries and also anticipate moves instead of just reacting, most times too late. And then of course, save hours of research with clear and actionable steps in order for you to be successful. So go ahead and check out the Profitable Gold Market Blueprint, and this timer will be active, and once the time runs out, the price will go up. I'll see you there. So central banks, especially the Federal Reserve, can really affect the gold market. For instance, if they announce a rate hike, that means that they're doing that because currently the US dollar is weak and they want to strengthen it. So anytime the US dollar is strong, it means that gold is weak. Because if you look at something like XAU USD, the XAU part is gold, and obviously the USD part is the US dollar. So when one is up, the other's down. So if gold is up, dollar's down. If the dollar is up, that means that gold is down. So there's an inverse relationship between those two. And that's why anytime they do a rate hike, it's usually bad for gold. But if they do a rate cut, it's usually good for gold. Gold is typically seen as a safe haven, where basically if there's any sort of tension economically or otherwise, then people tend to move their money inside of gold because it's seen as that safe haven, and they'll find more stability in the gold market, perhaps versus their own currency. So that's why one statement about inflation or something like that can really send gold either really high or really low and really, really fast. So in the last point, I talked about gold being a safe haven. And the second thing you need to focus on is inflation data. So of course, inflation is something that could really affect the gold market as well. So one of those indicators that you really want to pay attention to is CPI, which is Consumer Price Index. And if you don't know what that is, all that really means is that it takes, or at least the calculation takes, a basket of goods and it measures the change in price from one month to the next. And the thing that they're trying to see is, did price change and how much did price change from month A to month B? So for instance, it could be from July to August. And we may get the report in September because typically this is reported every 35 days. And essentially, this gives a quick snapshot of what inflation is looking like. And then there are a lot of different websites where you can look at CPI and how it has changed from month over month in order for you to get a understanding of what that may look like in terms of inflation. One of the other things that really moves gold is geopolitical events. So a lot of times there may be things that are happening inside of the world and it may affect gold tremendously. So let's just say there's some sort of political instability in one country. They may move some of their money into gold because they know that gold will have probably more value than the value of their current home country's currency because of all the political unrest. A lot of times when countries have geopolitical issues, then it could mean that there's high inflation in their country and basically they're taking a lot of money paying for very simple things. So it could be a situation where bread in a particular country costs $5, and I'm just using dollars because it's simple, but it costs $5, but because of the political instability, price could go up to $10 or $15 or maybe even $100 in some situations. And we've seen some of these examples in the past, and I want to say it was 1940s Germany, where basically people were taking suitcases of money to go buy a loaf of bread because of inflation being so high. So that can still happen and still does happen to a degree in this present day. And that's why gold is seen as a safe haven, because their money is essentially protected by being wrapped up in this gold instead of their home country's currency. So to sum this up, there are three key things that can really affect gold's prices. And first is the central bank, especially everybody's looking at the United States, but then there's also other countries that have central banks, and the way that they move can also affect gold as well. Primarily when I'm looking at something like XAU USD, I'm mostly focused on the United States. And the second thing that moves gold is inflation data. So we really want to look at CPI. That's going to be one of the key things that we look for when we look for inflation, especially inside of the United States. And the third thing is going to be geopolitical events. So there could be a number of things that could really move the market, especially if there's some event that happens, especially over the weekend. We've seen that a number of times in the past couple of years where really big news events happen and then we get really big spikes in the gold market, or sometimes really big dips. So it just all really depends. But if you understand these three key factors, then it's going to give you a better picture on how to analyze the gold market for yourself. So that way, when you're deciding to make decisions inside of the market, you're not just using technical analysis. It's the fundamentals that move the market, not necessarily the technical analysis. Technical analysis is just a representation of what's happening inside of the world to help us make sense of what is happening inside of that particular market. So I'm Lakeisha. If you like this video, go ahead and give it a thumbs up, and I will see you in the next one.